Forward testing is the key to test the robustness of our trading strategy. It is a crucial step to validate the forecasting capabilities of your strategy and give you the confidence to trade the strategy through the ups and downs until you can monetize its edge. Because we reserved a set of data for the forward test, it is unknown data for your system and therefore can be used for simulating the real trading environment. In a real trading environment, future prices are also unknown. If the strategy can consistently predict price with reasonable accuracy, it will give the trader an edge to become profitable. To forward test, simply apply your backtested and optimized strategy on the second set of data that you've reserved. But remember not to make any adjustments to the parameters with the forward test dataset. We want to see the trading performance of our system on unknown data first. If it is a robust model, it should produce reasonably good results like when it was applied to the backtest dataset. When you think the strategy performance has passed both the backtest and forward test datasets, you can then include the forward test dataset for further optimization to ensure it is more relevant to today's market. However, if the model performs poorly on the forward test dataset, it could be a sign that your strategy is not robust, and you should return to previous steps or research for other trading strategies until you've found a strategy that performs well in both sets of data. If you find this video useful, click like, subscribe and hit the notification bell, so you can get the latest updates. Thanks for watching, take care, and see you next time.